I'm feeling high.
Subscribe.
Alright, so before I go into the analysis for today, alright, today is Tuesday. Before I go into the analysis for today, alright, we'll be looking at 5 mistakes traders make during trading. 5 mistakes traders make during trading. 5 mistakes. Number 1 is lack of research. Many traders make the mistake of not thoroughly researching the asset they are trading, leading to uninformed decisions. Number 2 is emotional reactions. Emotions like fear or greed can cloud judgment during trading. Successful trading requires a rational approach, not impulsive reactions. Number 3 is ignoring risk management. Failing to set proper stop loss orders or position sizes can expose traders to significant losses. Effective risk management is crucial for long-term success. Alright, so number 4 is chasing of losses. Lot of traders does that. Okay, they try to recover back their losses by taking excessive risk in the market. That's one of the mistakes traders make, which often leads to further losses. It's essential to always stick to a well thought out strategy, a very good strategy that will be a bit strict, that will help you not to go out of plans. So remember, you must have a plan first of all before taking any trade. Very important. So number 5, the last one, is overtrading. Okay, trading too frequently or impulsively without a clear plan can lead to unnecessary transaction costs and increased exposure to market fluctuations. Patience and discipline are keys. Take note of that. So today we'll be looking at boom 300 index. Alright, maybe boom 1000 if there is time. Okay, so let's look at our boom 300 index.
Alright, you can see this is the market we took yesterday, and the market ended up hitting only our first TP. Alright, instead of going straight to our second TP, instead of moving from our first TP to the second TP as planned. Okay, you can see the market is not your friend. It does what it wants, it does what it likes. Okay, so the market is not your friend. That's why you have to put the necessary things in place. Like you having a very good risk management skill, okay, and also have a very good strategy, that you're using to trade. Then number 3, you must also have a very good plan, okay, a very good plan that you must use on every trade you take. You should be able to have a very good plan, okay, in place. It's very important because the market is not your friend. You can see how the market hit only the first TP and went back up. So for you to be able to win the market, you must have all of those things in place. It's very important. Okay, so the market only end up hitting this level, okay, and went back up. The market is not your friend that you must manipulate to always go your way. Okay, so you need to have those necessary measures in place. You must have your risk management in place. You must also have a very good strategy you're using. Then number 3, you must have a plan for every market. It's very important. You must have a plan for every market you're trading on. Another thing you should be able to have is a good risk to reward ratio, a very good risk to reward ratio. Okay, a very good risk to reward ratio, very important. Okay, for instance, now the reward ratio should be that if the market cannot hit my TP1, okay, it should hit me out at this level, which is my stop loss level. It should hit me out at my stop loss level. Okay, yesterday I asked them to shift the stop loss to the top. Okay, which they obeyed, and Thank God the market finally went our way, okay, and hit the first TP here, all right, which they all made money from, okay. Our RIT signal group is what I'm talking about. The risk to reward ratio to be taken should be that if the market cannot hit the first TP here, okay, all right, it should hit me out at this level, at my stop loss level. It should hit me out, okay. So if the market happens to hit the first TP here, all right, and cannot hit my second TP, okay, it should hit me out at my first TP. It's very simple, all right. So this is TP1 and this is TP2. So if it cannot hit my TP1, all right, it should knock me out at my stop loss level, okay. But if it happens to hit my TP1, okay, all right, if it happens to hit my TP1, all right, and it cannot hit my TP2, it should take me out at this level, which is my TP1 level, okay, all right. But if it should hit my TP2, all right, glory be to God, all right, we celebrate success, all right. So that's how you should trade. It's very simple. That's how you should trade, all right, to secure your equity or to secure your account, all right. To secure your account, this is the risk management strategy you should be taking, all right, or you should be able to take to secure your account, okay. All right, so
Like you can see on the charts, this is boom 300 index, okay. To expect the market to start moving from this level you're seeing here, this level, all right, this is the level we expect the market. Remember, this is our 4 hours time frame. So we've already drawn our trend line on our 4 hours time frame. Okay, look at our trend line here. Okay, this is how the market has been going since about 1 week now. I think, look at how 1 week to 2 weeks now. All right, so this is how the market has been going. Okay, so this is our 4 hours time frame. This is boom 300 index. So once you've drawn your trend lines, okay, all right, so the next thing is, let's zoom it out so you can see it very well. The next thing is, you can see this level here. Look at this level, all right, the shoulder, all right, look at the shoulder here, look at the header, all right. So you are still going to use something related to header and shoulder, okay, to work out our entry, okay. The shoulder and header pattern is what we'll be using, okay, to work out our entry on this market, okay. So at this level you're seeing here, all right, is the level we're going to take our entrance, this level, okay. So we have to be patient. Remember, patience is very, very important when it comes to forex trading. Patience is number one factor, is a key, all right, when it comes to forex trading. So you have to be very, very patient, all right. You don't enter the market when you're not supposed to. You don't take any trade when you're not supposed to. Remember, I've told you before that you must have your risk management in place. You must have a very good plan in place, and you must also have a very good strategy in place, a strategy that will make you win the market, a winning strategy, okay. So without wasting time, I've told you this is the point we are going to take our entrance, all right, in this market. So the analysis is that, all right, the market is still bullish for now, okay. So we have to wait for the market to be bearish before we take our entrance, okay, because we are going to sell, okay. So right now we'll be waiting for the market to cross this level, okay. You can see this level here, the trend line you're seeing up, going the bullish trend line you're seeing up here. Once you've drawn your trend line, okay, using your 4 hours to draw your trend lines, okay, so that you can know the actual direction of the market, the next thing you have to do is to allow the market cross this level, okay. If I zoom it back, you see that at this level, okay, all right, this is the shoulder. This is the shoulder level, okay, all right. So it has to correspond with the same shoulder level you're seeing here, all right. It will curve down here, okay, all right. So this is what we are likely going to expect. The market will move down like this, to move down like this, okay, because already there is a curve here. There's a curve here. You can see that the market is curving, okay, all right. There's already fractals on top of this market. I seen it. There's a blue fractals here, okay. So this market is going to curve like this now, okay. It's going to curve like this to this level, okay. So the next thing that will happen is, all right, it will likely break this level, okay. So likely break this level like this, to break this level like this, okay, to break this level like this. Once it breaks this level, okay, it will go down to create a support for this market you're seeing, because there's a market here, all right. There's a market here. The market move up here and so down and located this support you're seeing here, all right. Once you located the support zone you're seeing here, all right, what happens is that the market then shoot up again. Do you understand? So what will happen now is that the market have to come down and locate this support here again, all right. After locating the support you're seeing here, it will then come down to also locate the next support, all right, the next support zone you're seeing here, okay. So I said the market moved up, all right. It was bullish, so it moved up and it sold down here and located this support zone you're seeing here and later shoot up again. I seen it. So you can make profit using the 5 minutes, all right. If you want to scalp, you can make profit using the 5 minutes, okay, to sell this market, all right. So you can see the market terminated here, all right, after it located this support here and later shoot up again, and it will come down. It must come down again to locate this other support level here, all right, to terminate this market, okay. After it terminates at this support zone, there will be a kind of break, there will be a kind of breakout again, all right, to continue selling down. It will continue selling down, all right, to locate this other support zone here, all right. So once it locates this support zone here, so at this level is what I'm talking about, okay. At this level is what I'm talking about. So after it locates this support zone here, all right, the market will then shoot up and retest here, all right. There will be a kind of retest after it has located this level, this support zone here. The market will then shoot up, all right, and retest at this level. After retesting at this level to locate the shoulder level of this market, okay, of the full entire market, what will happen is that the market will then shoot down, all right, because this is another market, an entire market, okay. This is a big market. This market is on the 4 hours time frame. So all right, so after locating the shoulder, all right, what will happen is that the market will then start shooting down, okay, to start selling down, okay. You can see this level to sell down to this level you're seeing here, okay, to sell down to this level you're seeing here. So once it sell down to this level, there will be a kind of a retest, okay. Once it hit this level, the market will then retest again, all right. Market will then retest again, all right, and locate and shoot up a bit, probably locating this level. Then what will happen is that it will then start selling down, okay, to the next level, all right. So the market will then sell down to the next level, okay, all right. So that's how the market will move. Or probably there's a support level here, okay. So there's a support level here. At this level there's a support level. So after, at every support level, all right, you have to make sure you take your profits. It's very important. Take 1 or 2 profits, okay. So after it has located the support level here, what will happen is that the market will shoot up again, all right, probably locating the next level, okay. Once it locates the next level, the market will then shoot down again, all right, and continue selling down. Okay, it will shoot down and continue selling down like this. Okay, so you can see this is the structure we're expecting, all right, for the market to form. Okay, this is the movement we're expecting the market to take. Okay, all right, to move like this. Okay, because of the shoulder level you're seeing here, all right, the market will then shoot up and retest and start coming down again, all right, to locate the next support level. Okay, all right, and shoot up again, and once it shoot up, it will retest again at this level and come down again, retest at the next level, shoot up again, come down again to the next level. Okay, so once it comes down to the next level, to sell down to the final level where we take our final profits. Okay, so at this level we take our final profits. So this is the level we're expected to take our entry. This level here is where we're expected to take our entry. Okay, this is our entry point. Okay, all right, so if you can take your entry here, fine. If you can't take your entry here, all right, you can take at the next level. All right, so this is the next level, okay, of the entry. So but try to take your entry here. It's very important to take your entry here. Okay, so this is the next level you can take your entry, all right, and this is the next level for your entry. Okay, all right, so you can either take your entry here, or you take your entry here, or you take your entry here. Okay, so this is how you should trade.
I'm feeling high.
Subscribe, like, comment, and share this video around the Forex community to help others achieve their dream.